Welcome to the weekly market analysis. This segment explores the performance of Indian equity markets during the trading week of November 3rd to 7th, 2025. The market took a breather after a strong October rally, ending the week with marginal losses amidst global uncertainties and persistent FII outflows. We'll delve into the key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market ended marginally lower for the week, taking a pause after the recent rally. The benchmark Sensex closed at 83,216.28, a weekly decline of nearly 1%. The Nifty 50 also fell nearly 1% for the week, closing at 25,492.3. This performance indicates a cautious sentiment as the market lacked strong positive triggers and reacted to global cues. The market is currently witnessing a pause in fresh buying interest. The India VIX, a gauge of market volatility, indicated increased caution among investors, settling at around 12.4 levels. Several critical factors influenced investor sentiment this past week. FIIs were relentless net sellers, offloading significant equities which dragged the market down. The consistent selling was largely cushioned by robust domestic institutional investors buying, which helped prevent a sharper decline. Global cues were mixed to negative. Comments from US Federal Reserve Chairperson Jerome Powell hinting at a potential delay in interest rate cuts added to the market's weakness. Concerns over a prolonged high interest rate environment impacted investor sentiment. On this domestic front, Q2 results provided mixed signals with metals and OMCs leading the upside while some IT stock faced pressure. Bharti Airtel tumbled significantly on Friday after Singtel sold a stake in the firm. Sectoral performance reflected a rotation within the market. Metals and quality financials showed resilience and were among the outperformers in the volatile session. However, the broader market witnessed profit taking, particularly in telecom, tech, oil and gas, FMCG, and consumer durables, which were among the major laggards. Stocks like Bharti Airtel, Tech Mahindra, Trent, Reliance Industries, HCL Tech, Hindustan Unilever, and ITC were among the top losers. In contrast, Bajaj Finance, Tata Steel, Mahindra and Mahindra, and Bajaj Finserv were among the gainers. This suggests a cautious shift towards value oriented stocks amidst the prevailing uncertainty. From a technical standpoint, the market exhibited a healthy retracement after a 1500 point rally. The Nifty 50 closed just below the psychological 25,500 mark, which is a key support level. Analysts highlight 25,450 to 25,350 as the immediate support zone, with resistance seen at 25,700 and 25,800. A decisive break below 25,350 can open the door to 25,100. Experts advise that the market is expected to remain cautious and range bound with a negative bias in immediate term. Short term traders may look for selective buying opportunities in quality financials and metals while keeping stop losses tight. This analysis is based on information available as of November 7th, 2025, and market conditions are subject to rapid change. Investors are advised to consult with a qualified financial advisor before making any investment decision. Thank you for joining us for this week's in depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements.